I have once again the great and powerful Stephen Fiorillo here to talk about Tesla stock and how he's playing Tesla stock. Maybe some concerns that he has about Tesla going into the future. So, how you doing, Steve? You've been writing articles every week, I think, and most recently, maybe not most recently, but you wrote a Tesla article recently talking about some bullish things, but maybe also not so bullish, or at least taming some ultra bulls of the company.
Listen, I am now a shareholder of Tesla, if you can believe that. And I hope everything that some people are saying happens because I will make a lot of money.
Yeah. Some people, eh?
Some people.
Yeah.
Some people.
So I've spoke about this before. The some people we're talking about is a Kathy Wood article that had come out talking about a $2,600 price target. And while that is amazing, it was sort of how they got to those numbers of being 90% based on ride hailing by 2029. Um, Steve, what did you think about those numbers? I mean, bear side $650 billion by 2029.
Look, I hope I'm wrong. I
Mm-hmm.
hope they're correct, obviously, for my wallet. I mean, if they're correct, it'll be a really good couple of years. And I couldn't make the math work on my end for their bull case. That doesn't mean that they are incorrect or I am correct. It just means I have a different opinion than them. They did research one way, and what was interesting to me, and I would actually love to have a conversation with somebody over there so maybe they could
Right.
clear my mind on it because maybe I'm completely missing something. But they happen to be the most bullish on the aspect I'm the least bullish on. And I think that's where a difference of opinion comes in because I'm looking at it from a very bearish aspect with robotaxis from two areas: government and insurance.
Sure. Cool.
Because so many, and I'm not saying it can't happen, and I'm very interested in look, Elon's event on the 8th of August, I believe it is, could completely change my mind. Okay. I am obviously I was a bear. I've gone bullish. I'm a shareholder directly, not indirectly through my wife. Like I'm in there. So I, just like anybody else, I'm willing to change my mind and update my investment thesis. Maybe that happens again. But at this point in time, until I have more information, it's very hard for me to get behind. Everything is just going to fall into place for the robotaxi bull thesis to play out because you need government. There's government regulation on some level, local regulation on some level, adoption. There's a lot of things that have to go right that I'm having a very hard time seeing on an insurance aspect. Who is the liability on if a autopilot vehicle with no human operator, if that gets into an accident, God forbid, who's liable? If I buy a Tesla and I enter it into a robotaxi platform and I'm sleeping at my home and it gets into an accident with somebody in it, am I liable because I own the vehicle? Or is Tesla liable because it's on the Tesla network, they're operating it remotely? There are things that I have questions about that I don't believe have been answered. That may have been answered, and I could have very well missed it, but I think that those are things that need to get worked out. How do you have to have Tesla only insurance for this? Or are other insurance carriers going to provide insurance for this? I would like to know, out of all the Tesla owners of vehicles, do they have their car insurance through Tesla? Or is it on an auto policy through Berkshire or somebody else because they happen to have other vehicles also? There's a lot of questions from that aspect. And we all know that votes run slow. To get people to agree on, to get five people to agree on something is one thing. Get the federal government representatives, get local municipality representatives to agree on this. I think 2020, I'm not saying this isn't the future. I think it's the future. If they had put
Right.
2036 or 20 38, I think I would be like, yeah, that makes complete sense. But to say 2029, I believe was the date that they gave, it's a lot of things have to fall in place for this to work out the way that they're saying, especially considering the research that I've done, the taxi market isn't even that big on a global scale.
So I want to clarify your words because I don't want anyone to misinterpret you, and I don't want to misinterpret you. You're saying by 2036 or 2038, your targets there are to get to those levels, not to get ride hailing services up and running, but to get to the hundreds of billions of dollars, like late hundreds of billions,
No,
almost.
I'm just saying that if those were the dates that were thrown out, I think I could get more behind the Robotaxi aspect for that amount of revenue or that level of adoption, one of the two. I'm just
Right.
making up a year that I would have felt more comfortable with for that thesis. But to say that the bull thesis for 2029 is predominantly dependent on Robotaxi, and you are not considering Optimus, FSD, direct, FSD licensing to other OEMs, or the supercharging network, to not consider that and have that kind of be the icing and the cherry on top, well, those are the things I'm most bullish on.
Or energy storage, or
Energy storage or anything like that.
just
Energy,
just just car sales and ride hailing.
it, I don't know. I would love to have a conversation with somebody there privately or publicly. It doesn't matter. A 30-minute conversation. Just help me understand the like everything that you see going right and a timeline of it, because I think too much has to go right for that to play out. So
So
I think the other aspects of the business are more interesting at this point, especially Optimus. I think Optimus, this is what made me become a bull and buy shares, has more potential than the entire car business. I said that before Elon came out and said that in his last video. I mean, the entire sector of what that can do is huge.
I'll just highlight here on Farzad's YouTube channel, another, uh, or at least one of the largest names in this sort of Tesla space. He actually had Tasha Keeney on, who is part of ARC's team and did a part of the valuation for, uh, you know, the Tesla Robotaxi being 90%. So
I'm
if you
not
want a
I'm
little
not
bit
I'm
more,
not interested in the valuation. I'm interested in how they see regulation going and what they are basing that on, because that's the big point. Without getting the regulation and without this being allowed, it doesn't get off the ground.
yeah, yeah,
That's the biggest
they
thing.
definitely
Show me
add
a
in.
roadmap of regulation and what jurisdictions you think this is going to be allowed in and how it's going to work. Show me that, because I think that's what needs to get answered first.
So on the insurance side, I think I heard something, and the comments will correct me if I'm wrong, or maybe I'll look it up after this conversation. But there's some level of autonomy. I think it's like level 4, where it actually does become the owner of, like, Tesla, the maker of the vehicle, will be responsible for the insurance. But I forget what, and I might get corrected if I'm wrong. That might be something I had thought of.
Yeah,
Anyway,
and look, that would be if that's the case, great, because it takes the liability out of the direct owners, but that could also be bad for Tesla.
could be,
I
yeah.
mean, look, we don't know because this hasn't happened yet. So everything is speculation, but you don't know if there's going to be massive amounts of accidents or if there's going to be zero accidents. You don't know how to model for that. So it could be a very great strategic move or it could hurt them. Who knows?
I also find it kind of weird because they don't. Part of their modeling was not that Robotaxi is going to be launched this year, and in fact, they even put it at only 60% chance of launching in 2025 and a 40% chance of launching in 2026.
Do you mind going to my article and just bringing up that picture that I put in there from, I don't remember the analytic company, but it was the one about the entire
Morgan
taxi.
Intelligence.
Yes, that
Yeah,
one.
I have it here.
And I think that's where I also have a little bit of skepticism on this because, and I'll wait to say this comment because I wanted to see the numbers, but they're saying that the entire taxi market, Yellow Cab, Uber, Didi, everybody,
Hmm.
in 2024 is going to be under $300 billion. and that it's only expected to grow to $432 billion in 2029.
Yeah, and
So,
even if you add on public transportation, like
but
buses and everything like this, it
so
still doesn't add up to their number.
this needs to grow by double. Now, I'm assuming that these numbers are correct. Okay. I obviously don't know if these numbers are correct. This is what Mortar Intelligence came out with. So I'm using this as kind of my baseline because I have no clue what the numbers are.
Mhm.
Okay. I'm not reading a financial statement and showing revenue is $100 billion. So these are the numbers I am looking at right now. If, big if, but if these numbers are correct, how does the taxi market more than double in the next 5 years? Okay. That's question one. Question two is, how does Tesla capture 100% of a market that has to double, more than double in the next 5 years? And are you assuming people are going to stop buying cars and utilizing a robotaxi network because it's more efficient? Well, people could say it's more efficient for them to get Ubers today, but people aren't necessarily giving up cars just to use Uber or Lyft.
Right.
And I understand what the pushback on that is, that robotaxi is going to be so much cheaper because there's not a human element that you have to pay. It'll reduce the cost by 30 or 40 or 50%, whatever it ends up being.
Yeah.
I still have a hard time, one, believing that every single person that is going to purchase a Tesla is going to enter it into a robotaxi platform. Personally, I would not, because if I'm buying a car, I'm buying it for me to drive and use. I don't
Mhm.
want it chauffeuring people around. That's one. Two, I'm sure people will buy it as a business opportunity and that's fine because people are going to try to make a business out of it. But I just am having a hard time seeing how they get to those numbers because they have to have 100% of a market that isn't even supposed to be that big.
Yeah. Yeah. And then also there's also just an amount of cars that are going to be on the road in order for them to achieve that. Like I think there's so many unanswered questions right now. Like, some of the things that Elon said was sorry, my brain's bouncing around to a bunch of different ideas, but he said, your car is going to go out overnight and maybe be out there for 24 hours picking up and dropping people off, but who's going to charge that? Like you still need a
Well,
human to go and plug it in.
well, and let's just hypothetically say you don't need a human, that you have a robot arm at a charging station that does it, which is very feasible. You got
Well, that's a lot of charging stations that need to be updated between now and
Okay, but that's
2029.
not impossible. That's something that you can engineer and get through. That is not even a concern of mine. It's going to take capital, but it can be done. I think what the bigger part is, how many people are going to be going out at night that needs these rides? You need rides during the day to get to and from work and to and from things. People sleep at night. I mean, I'm having a hard time with it.
So
Not to
another
mention, you want this car driving around all day. It needs a charge.
yeah. 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 No, I mean, you're going to want it eventually as well, right? But another problem that I have is that there's levels to the hardware that are in these vehicles. And they've made 4 different generations of the onboarding hardware that's been a part of these vehicles. And now Elon Musk is talking about a fifth version that's going to be 10x stronger than the fourth version. Well, that is supposed to be in production by the end of 2025, like actually in vehicles. Well, that's going to be a significant, at least from my understanding, a significant difference in their FSD capabilities versus the older models. So it's like only the newest, most updated versions are going to have maybe the safest versions of FSD. And so I don't know. Yeah, I don't know. I just find the number to be realistic if the timeline was extended. Like I do think that most travel is going to be uh, going through cars that are not self or not driven by a driver. But even Uber and Lyft and all of these companies still haven't replaced yellow taxis, let alone. So even whenever there's innovation, does not mean that the market before it gets wiped out.
And I don't discount anything that Elon says he's going to do because he does what he says he's going to do. If there's one person, one CEO that's unfair to say. He's one of the very few CEOs that if he says he's going to do something, I believe it.
But doesn't necessarily mean that he does it on the timeline he says he's going to
That's
do it.
not what I'm saying, though. But if
Timeline's wrong.
if you ask me, will Tesla have the capability? Will they be able to produce? And will this be a thing? I'm going to say yes.
Yeah.
He hasn't disappointed yet. The guy did the impossible, and it's very hard to say, yeah, he's not going to be able to pull this off. I think all indications are he's definitely going to pull this off. I just don't know that it gets to the scale that ARC thinks it's going to get to in 2029. Because if you ask me, do I think we're going to have self-driving? Yes. Do I think that people will use it? Yes. I don't know if all the jurisdictions, because you're going to need LA, you're going to need New York, you're going to need Austin, you're going to need Houston, you're going to need the major cities. And I don't know if you get this to pass in the major cities over the next 5 years. To me, it's more that it's not betting on the technology, it's betting on legislation at that point.
Sure. But so you're still very bullish on it. Do you still think that commands a premium for the stock? Like, are you buying it with Robotaxi in mind?
No, I'm putting a big fat 0 on Robotaxi. I could care less about it. That to me, my investment case is the exact opposite of ARC's. I think that Tesla can become the most valuable company in the market at some point. I think that they have more potential than any company at this point in time for the future. Robotaxi is kind of the icing on the cake at this point, because Optimus has so much more potential than everything you could throw at the car business. It's crazy. I mean, really think about this. And what I'm going to say is going to get taken out of context. At a $20,000 to $24,000 price point for a robot that is going to be able to do everything that people don't want to do. And when I say that, you're a homeowner. You have responsibilities. You have to cut the grass. You have to do laundry. You have to fold your laundry. You have to clean. If you have a pool, you have to skim the pool. You got to put chemicals in the pool. At some point, you got to think that Optimus is going to be able to do every one of the tasks I just named. Even if you just start with cutting the grass, doing the laundry. Right there, if you look at it from a car model with financing over 5 years at a low interest rate, you're going to pay roughly $340 a month or so for Optimus over 5 years. I think the model that Tesla's going to use, I've written about this twice now, they'll have like a $29.99 or $39.99 a month learning plan. Every bot that they have hooked up to their network, every task that every bot does globally will get uploaded, and every bot will learn every second of every day, and they will just become more efficient and better as not just they perform tasks, but every bot in the network performs tasks.
Right.
I don't think that'll be available on the consumer level for years. I think they're going to get gobbled up by Amazon, Walmart, all these other companies.
A lot of logistics. Yeah.
I think that when you talk about manufacturing, it's hard for me to see another company that can get to mass scale quicker than Tesla, for the simple fact that we saw what Tesla pulled off with manufacturing with vehicles.
Right.
If they use the same blueprint for Optimus, I don't think another company is going to be able to touch them with mass scale production. And at a $20,000 to $24,000 price point, and you really think about it, and people are like, oh, I would never spend 20 grand. Well, maybe you would, especially when you get in your later years. And even now, people are putting more of an emphasis on their time. I used to never want to.
Who's saying they won't buy a $24,000 robot?
I've talked to people who said they would not buy one. I've talked to many people that, not many, but people, a good amount of people that said that they would not buy one. I don't think that the price point is a deterrent at that point, because when you think about how much time you're going to save, you talk about more of a premium on your time. I mean, if anything, the pandemic did was pull efficiency forward. And you think about how everybody used to go to the store to get everything. I order half my stuff on Amazon now because it comes same day or next day. So if I don't need something immediately, and if I can get it on Amazon, it's not perishable good, there's less of a reason for me to go to the store when it can get delivered right to me.
Sure. Yeah.
So if you take that same model with somebody that doesn't have to spend an hour or two cutting the grass, somebody that doesn't have to do their own laundry anymore, somebody that doesn't have to do the dishes or clean, that robot becomes really a personal assistant to do all the things that you don't want to do. You spend more time with your family. You can spend
Heavy
more time
lifting, all
working.
this stuff.
You can spend more time at the gym. You can spend more time hanging out with friends and family. Like, you don't have to do those tasks that prohibit you from doing other things.
Yeah.
And I
Yeah.
think that's where it becomes very interesting, because how many of these bots will be sold outside of the business level? And then
Mhm.
at some point, I think you'll have businesses made on the bots. You'll have cleaning businesses that are robot based. You'll have
You know
other
what's so
types of
funny
businesses.
though? Think about what the market will do to the pricing of those cleans if there's no humans involved. Like they'll
Yeah,
just
yeah. It becomes a
they'll
pure,
just go way down in price because
yeah, it becomes pure supplies.
yeah,
Supply of Optimus. What's your cost on that? What are you buying your actual cleaning supplies for? You know, getting the bots to and from, it becomes a little bit of a different business model. Same
you
business model with different inputs for costs.
you get your robo taxi army into the cyber cab and then you self-drive your way to the jobs.
Yeah, I mean, you say it and laugh, but it is entirely feasible over the next 20 years.
Oh, no, I'm dude, I cannot fathom the world that we are going to get into going forward. The only thing that I can think that is a roadblock is legislation.
And I think that legislation is going to have to come out where you can't replace more than 5% of your workforce with robots.
Mm.
Otherwise, I think this just becomes, when you compound, I don't think we understand. I
What about
certainly don't.
specialized tooling and stuff?
I certainly don't understand it, and I don't think a lot of people really can understand how AI is going to make computing compound over the next 5 to 10 years,
Mhm,
and what that's actually going to look like. I mean, we are truly in the fourth level of computing now.
mhm.
When you really think about personal PC to internet to cloud to SaaS and now AI, we're in the infancy. So
Yeah.
when you really embed that into the Optimus platform 5, 10 years from now, how many things is it going to be able to do? I mean, you talk about, why would you want a human lifting heavy items in a factory and potentially getting a workman's comp claim,
Mhm.
or hurting themselves, or no more sick time,
Do you
no
think
more
there'll be
anything?
a
It's, I don't know, you're going to need some type of legislation to protect jobs, but that doesn't mean that you won't have CapEx allocated toward Optimus and still retain all the jobs and just become more efficient also. Like, that can very well happen also.
I so a bunch of people think, okay, so AI is going to replace a bunch of white collar jobs. Now Optimus is going to come in and replace a bunch of blue collar jobs. This is potentially leading to UBI or even what Elon Musk recently said. He said,
Yeah, they may need it. I mean, that's a much bigger conversation. We don't have enough time to necessarily talk about that, but they're going to need to figure something out. Andrew Yang was on point with what he was saying. And he was saying this in 2019, 2020. And it's something that needs to be seriously thought of, because AI plus Optimus could bleed over into white collar, not just blue collar.
mhm.
Definitely could.
Yeah.
So
So do you think
who
that like
knows?
corporations are going to have to pay tax per robot that they're using or something?
I have no idea what is going to happen with that. I think we're going to have to see how it unfolds. But
Yeah.
Optimus is the biggest thing that I am interested in with Tesla, because I do think it's going to become their biggest moneymaker. I think it's going to become way bigger than the car business.
Yeah.
And the next thing is FSD. Put Robotaxi aside. If you get Ford and GM to license your FSD, I'm way more bullish on that than Robotaxi.
Mm.
I mean, you're now getting an upfront fee and then a cut of a monthly fee from their drivers. I mean, it's just, how is this not part of the roadmap for ARC? And then supercharging network. How is nobody talking about the fact that these OEMs are utilizing the Tesla hookup. So now you're going to be getting them using your charging station. So now Tesla's the freaking key behind everything. FSD licensing, you're getting a monthly fee, something from all these companies. Then you have charging stations that they're using, and you're selling everything direct to consumer under your brand of Tesla. All those things are more exciting to me than Robotaxi. Now, I hope I am wrong, and I am right, and ARK is right, because then Tesla, I could see them being a $30 trillion company in 15 or 20 years.
That's the number I had in my head.
And, it sounds like a ridiculous number, but if all these things happen, I mean, look, Amazon is expected to be the first $1 trillion revenue company in 2029. You could see Tesla generate $5-10 trillion a year at some point, 15, 20 years from now, not 5 or 10 years from now. But I think it's entirely possible if things fall into place.
Okay, so let's talk about strategy here for a second, because I do agree with you, and Tesla's no longer just a car company. It might be right now, but it has so many different markets to grow into right now, all that have larger total addressable markets than the ones that we could talk about before. Why invest in, a dividend portfolio if you have this once in a lifetime stock that is going after the largest problems on earth?
So, look, I was wrong in the beginning when I said it was just a vehicle company. Because at the time when I was saying that, it truly was just a vehicle company. Vehicles represented 100% of their gross profit. Okay. That's an automobile company. I would even agree with somebody saying it's still an auto company today to some extent, because it's where most of their gross profit and revenue is generated from. But energy business is profitable on a gross profit level. So now you're starting to really become diversified. They're adding big scale on energy, and you have the verticals for FSD, which will make it a software play. And they're pretty close to that from what we've seen. And you have them looking like they're going to be a dominant player in robotics from the Optimus platform. So I think that this is going to become the biggest conglomerate we've ever seen. And I like being diversified. I like having income come in. So I'm not putting all my eggs in one basket. I never do. That's not how I invest. But I got a good position in Tesla that I'm happy with. I may be late to the game, but looking at it from a 10 or 20 year timeline, I'm probably going to do just fine with the investment that I made.
So I'm going to press you just a little bit more, because I think if you were to look at the positions that you're holding and then what their potential share price could be 20 years from now versus Tesla, I don't know if you could find a stock that might have a higher appreciation other than maybe Nvidia or one of these other very explosive names that could have the potential of growing into a much larger valuation over multiple decades. You are very diversified. So we're not just talking about an equities portfolio here. Let's talk, total portfolio, whether that includes real estate, collectibles, alternative assets, whatever, right? Does Tesla make up enough of your portfolio to capitalize on the appreciation in the stock, if you believe even 1/30th of what's going to happen comes true?
Let me turn it back on you for a second. Does it really matter? And here's what I mean by that. If you think you make a financial long-term plan for yourself, you have a number, you think you're going to hit that number the way that you're doing things, does it matter if you go all in on Tesla or not?
I see what you're saying. When's enough, I guess.
So no, I wouldn't classify it as that, because you could make an argument that it's never enough. But if you legitimately have a number that you need to get to by a certain point to be comfortable and not have to worry, and the strategy that you've built gets you there to that number with an allocation that you're currently at with Tesla, is there necessarily a reason to take money from other areas and consolidate into Tesla? I mean, yes, you could make more and you may be able to get there quicker, but you may not, and things may go wrong.
But this is not the highest risk. So
It's a
you're
little
talking
risky.
downside, right?
Let's not say that. It's a little risky.
No. I'm not. It is a high risk stock. I'm not saying it's like
It's a higher risk and definitely higher reward stock.
right. But what I'm saying is you probably hold higher risk positions
Yes,
that may
I would say I probably do.
that may not have as much upside.
Yeah, I think that's fair, and I definitely am holding stocks that will probably never generate what Tesla could generate. So
Mhm.
I mean, yes, obviously, but I invest for different reasons. I have different baskets with different goals.
Sure.
Basket one is income. That money doesn't matter for capital appreciation because it's for generating income, reinvesting it every month or every quarter, whenever the dividend or distribution is generated. So it just generates more and more and more, and it compounds.
Yeah. Yeah.
There's another basket for capital appreciation. There's another basket for safe,
Yeah.
for your S&P index fund. I mean, there's different baskets for different things.
There's a
Don't
collectibles
need,
one.
I don't need to put everything in one thing.
Let me just butt in for a second because the conversation is about to take a little bit of a detour into Stephen Fiorillo's collectibles investments. So now that's about a 6-minute conversation. I'll let you guys skip to 37 minutes and 20 seconds if you do not want to hear anything about any of his other alternative assets. But if you do, go ahead and just keep watching. If you don't, skip along to the rest of the video. I've left chapters down below. Also, I recently found a Netflix series called The King of Collectibles.
Oh, where Ken Golden?
Yeah,
Pretty crazy, right?
it's crazy. What an
Crazy,
interesting market.
crazy story.
Yeah.
Yeah.
So, I'm with you on the idea that collectibles. Unlike, I see people bashing you sometimes and say, "How are you more bullish on Pokemon versus Tesla?" I saw a comment like that on Amit's channel,
I
but
don't know that I've ever said that.
no, it was a comment that was made to you.
Like I would know if I said that. I really don't think I've ever said that. That would be
But
crazy.
still, even though I'll defend that statement, even whether you said it or not, it's
What
that it
I've
doesn't
said,
matter
like
about the.
I know what I've said. I've said this at least 10 times, okay? That with the data that we have right now, and I can pull it up because I plotted on June 11th for a podcast that I went on. The sealed Pokemon boxes, okay,
Mhm.
booster box of 36 packs. Sealed booster boxes has outpaced the S&P 500 after a 3 to 5 year period in roughly like 93% of the cases. So it has a very long and a very wide track record of generating more appreciation. Like that's just a fact. That's the
So
data. That's a fact.
here's what's not in your data though that I disagree with. One, the market is as illiquid as it gets. Okay. The fees.
Hold on. Hold on. I'm
Go
not
ahead.
talking about how hard it is to get out of it or the fees associated with it or anything
I
like
know
that.
you're not, but that's an
What
important
I am
part.
saying is that on a percentage basis,
I know, but it should be
it has
factored in.
outpaced S&P. That's all I'm saying.
But just so that for the people that are listening, one, the fees that are associated with buying and selling these assets because they are so illiquid are very high. Sometimes auctions
Hold
take
on.
as high as a 20% cut
Hold on. Hold on. 13.5% to sell on eBay.
on eBay. Okay, but if
That's your
you go
number
to
one place to sell.
Golden Auctions, for example,
No,
or
you're not
Heritage
selling.
Auctions, or any of the,
You're not selling booster boxes on Golden Auctions.
sure you are. If you're
No,
selling,
you're not. You're not.
if you're selling first generation Pokemon box, you can sell that at big auctions. They go for friggin'
But that's not what I'm talking about. I'm not talking about first generation booster boxes.
okay. Well, I'm anyway. One, so there's a bunch of uh, fees associated. It's a liquid, and there's a ton of counterfeits. This is a thing no one talks about. A lot of the boxes people buy, they end up opening those booster boxes and they've already been stuffed out of the deal because people vacuum seal the plastics. It happens like 20% of the time. It's an unbelievable, weird market. So that's the only thing that I disagree with the Pokemon argument.
Bring up what I just shared. These are the numbers. These are the facts as of June 11th. I did
But it
this.
only shows one part of it.
No, but this is the part that I do. I don't care about singles. This is what I do. Almost every box has outpaced the S&P 500. If you bought one box, just one box at $105 a box since 2014, you would have been up 527%. If you had invested in the S&P through VOO on those exact dates, you would be up 122%.
Right.
After the fees, you're still up more on these boxes. Now, if that's going to happen, who knows? Pokemon could go away tomorrow. What gives me confidence in the Pokemon market is it's the largest media franchise in the history of media. It's only getting bigger. You look at regional tournaments, like this is actually crazy. Thousands upon thousands upon thousands go to these tournaments. There's regionals, there's international. It's huge. Okay. It's wild how big this stuff is. So that is something else. But yes.
You don't need to sell me on the market. Like I understand the pull. Like I understand the idea. It's just the reason what I like.
I'm not saying it's better by any means. It's illiquid. It takes work. You got to sit on it for a long time. You can't just hit a sell button. You actually have to sell it, ship it. Look, I'm not worried about the stuff I'm buying because I buy it from a local shop. It's not counterfeit. I know where I'm getting it. Everything is sealed, receipts, everything. Like I'm not worried by any means.
What's it called? So, and it's crazy how much due diligence goes into these boxes. Like people will go down to the gram. Like whenever they're buying the boxes, they know what weight the official boxes should look like.
I mean, look, that's something people do. People will bring a digital scale to Walmart or Target. They'll weigh individual packs and try to only buy the heavy packs because the heavy packs normally means it has a special card in it.
Right.
Because a hollow card weighs more than a regular paper card.
Mm-hmm. It's a very weird market. But anyway, that was off topic. I might even cut it out for like a members only show or something because that's, although I love it, I want to make sure that we stay on target with Tesla. So
with Tesla, and the other reason why I'm investing is because the premiums on the options are so big.
That's what I was going to get to. So let's talk about it. So how are you playing this?
Yes. So I'm into Tesla at an average price of around 182.40 or 182.60, something like that. So I actually made back 1.87 or 1.89% of my original investment with a 3-week covered. It was 3-week covered calls I was writing. I think I wrote them on, I don't know, the 18th maybe or the 19th, somewhere around then. I should probably just bring up, how familiar are you with options?
Learning.
Hold on. So I should have a visual up. So let me go to Tesla. Let me get your visual.
I think, by the way, for the channel, I think I'm going to bring on something very special coming on soon. That'll be more options focused, but leaning towards the beginner side. Because I've told everyone this, I never got started in options. I never really had the tools. I'm from Canada, just for the people that don't know this, and our options are few and far between versus what you guys have in America with easy retail tools like Webull, Public, Robinhood. These sort of tools is not something that we have available to us. So
all right, so bring up what. Can you see it good?
One more zoom would be terrific if you can. Perfect.
All right, so basically one option contract is the equivalent of 100 shares of a stock. Mm-hmm. And when I'm selling a covered call or multiple covered calls at a time, I am selling you, let's say you're the buyer, I'm selling you the right to purchase my shares at a specific price on a specific date. Okay.
Yeah.
So basically, I'm into Tesla for like 182 something. And I wrote covered calls on the July 5th chain. It was roughly 2.5, 3 weeks when I wrote it out. And the gray is called in the money. The unshaded is out of the money.
Yeah.
So I had written the calls at a 192.50 strike. So that basically means if the call option does not get to 192.50, it expires worthless. I keep the money I was paid.
Mm-hmm.
If you were to write this today, it's almost around the same price that I got. So the bid is $3.30. So every contract is worth $330. So I think I got paid around 362 or 364, somewhere in that area per contract. And after my commission, I netted like 359 or something like that. It was very nice premium. I generated off of about locking my shares up for 2.5 to 3 weeks, about 1.87 or 1.89% of my initial investment, which is manufactured income. Now, the beauty of it is it was roughly $10 above my average cost. So let's say hypothetically it gets to 195. I got two options. I can let the option one is I can let the contract expire. My shares get called away. They automatically get sold at 192.50. I take in the money from my contracts. I make $10 a share, and I keep the $359 per contract that I netted on the premium. Option two is, let's say it gets to 195 and I got a couple of days before the contract expires. I can then buy back those contracts and write another set. So let's just say I wanted to buy them back. So it's at 330. I would need to go further down the line. So let's just say August 16th. Oh, these are big. We can go sooner than that. July 26th. All right, so July 26th. I could sell July 26th at 200 strike, pocket 655 a contract, use roughly 50% of that money to buy the other contracts and close those positions, and I pocket another $320 a contract using somebody else's money.
Right.
And I roll my price up and out. So now instead of being a 192.50, I'm at a 200 strike, and I got another 3 weeks there. So I can legitimately use somebody else's money to buy back the contracts that I originally sold and make more money. So my goal is to eventually own my Tesla shares for free by manufacturing my entire initial investment over a 2 or 3 year period. So that's why Tesla was very interesting to me also, because I'm not sitting there just letting it sit in the account naked. I'm using it to generate option income.
Right. Yeah, no, the way that because I like whenever I was first getting trading, I never really knew about level 1 options, like, covered calls and cash secured puts. So I didn't realize
you can make so much money with your Nvidia position doing this.
And how much.
If I showed you the Nvidia premiums, it's crazy.
Really?
Crazy.
But what is what's the actual risk? Is just,
Depends
I guess,
who you ask. I don't think there is a risk.
Or I guess it's more opportunity cost, right? If it runs so far that
there's a tax
shares are called away and then I don't see
consequence, but if you understand what you're doing, you're making a predetermined decision that you're okay with the consequences of losing your shares or having to roll. I mean, you can theoretically, and I'm going to take TJ's phrase because he is the first person I've heard say this, but he's 100% correct. You can keep rolling until you're right. I mean, theoretically, you can just keep kicking the can down the road until you're correct and keep getting paid. So, I mean, the real risk is that your shares are tied to a covered call contract, but your shares are the asset tied to it. It's not like you're doing this and not owning the shares. So for me, when I say that there really isn't any risk for me, it's because I own the shares at a lower price.
long time horizon.
let's say that Tesla goes to 200 and I don't want to buy back the contracts or roll. I want to let it expire worthless.
Mm-hmm.
I'm still making $10 a share plus the premium I was paid. I'm still in the black.
Yeah.
So it's not like I'm losing money. And if Tesla goes down, well, I'm buying Tesla for a 5 or 10 year horizon. I know that it's going to fluctuate. So if it goes down, contract expires worthless. I keep the premium. I write another contract.
Yeah.
I mean,
So you do this on positions that you're holding super long term anyway.
yeah, I try to do it on a lot of my positions.
Yeah. I'm doing it on none of my positions.
It's a good way to buy more stock of other things.
Yeah. No,
I mean, you're
realizing
legitimately
that.
getting paid and you can use other people's money to go buy other stock.
Yeah. Yeah.
I'm going to blow your mind right now. And I do not know how much NVIDIA you have. Let's be very clear. I know it's a substantial position, but we've never actually said how much it is.
Yeah.
I just know that you have a few shares.
It's my largest position right now.
You didn't have to say that, but you have a few shares. You may be able to write a cover call. So just say you may be able to. So let's just say you have 100 shares of NVIDIA. Let's just say.
Okay.
Which I don't think is true because they just split 10 for 1, but you know. saying. Just saying. Amongst friends.
Oh, you're funny.
So July 5th, 2 weeks away. Okay.
Yeah. I think, by the way, it's mathematically impossible for me to have less than 100 shares because I bought it when it
don't say it. Just don't say
it. But I'm just saying, like, from the price appreciation and the split, it's impossible that.
All right. So NVIDIA is at 126 right now. 126. We could go $10 out of the money and you could get paid 104 per share at a 136 strike. And this expires at the end of next week. Every 100 shares that you have, you could sell a covered call and get paid $104 over the next week and a half. So if you happen to have 1,000 shares, you make $1,000 in the next week and a half doing this. If you happen to have 10,000 shares, just saying.
And how often can I write these?
I mean, NVIDIA's got weekly chains. I mean, we could kick it out. It's got weekly options. You want to do
weeklies?
Oh, this is going to blow your mind. So it's weekly, and then after July, it's bi-monthly, but that'll change as you get into August. But let's just say, you know what? I don't want to write a weekly call. I have to look at it. The December 20th chain. This is crazy. You could get paid on 150 strike, $11.50 a contract. So you can make $1,150 per 100 shares.
Per 100 shares.
Per 100 shares. Look at his eyes light up. Per 100 shares at a 150 strike. That means that NVIDIA's got to go up by like another 30% for your shares to even be at risk of this contract hitting. I'm not saying that's not going to happen. It could happen.
But then if it does hit, then I just get the amount of the.
Yeah, you can let it just expire and your shares will sell at 150 and you get $150 per share.
Yeah.
And you keep the premium.
Keep the premium.
You can just buy another, you can sell contracts down the road and rebuy these ones by rolling.
So why'd you pick the 150 strikes there? Was it just based on the volume?
I figured it was a number that made you comfortable.
But why is the volume so high on certain?
The volume, the interest in these is crazy. I mean, people just, those are the option contracts that they're betting on. I mean, basically,
I don't see the difference between the 150s and the 152s. Like, why is it so much different?
People are more inclined to buy the 150s for options. I don't know.
Okay.
But yeah, you could do pretty well with your size position on NVIDIA. I mean, you got that. If you have 1,000 shares, you can make 12 grand real quick. Cash. Like Palantir, I'm doing it. I actually had to roll my Palantir options. I actually had to go all the way out to December because I was getting cute playing with a very close to the money option to collect as much premium as I could. And I ended up making a good amount of money on it because I sold contracts for December. And,
But can't I just go so far out of the money and just make a small premium?
sure, you want to go 170? You're still going to get paid freaking $720 every 100
Yeah,
shares.
or like, what does it look like at 220? Like, I mean, like,
You
does it
want to
get
go
to a point where it's like
200?
I don't
Sure,
even have to monitor it?
sure. 200 in December, you get paid $365 every 100 shares.
It's better than the zero I'm making now.
Better than the zero you're making now, and better than the little dividend Nvidia's paying you.
So what happens with my dividend?
You still get it. You still own the shares. I started doing this on my dividend stuff, and then I started moving it to everything else because I wanted to increase the amount of income I was generating from my dividend stocks. So something like Omega Healthcare, which is paying me 8.5%, I actually just wrote cover calls on that yesterday or the day before because they rolled off on Friday. I mean, I'm able to bring that dividend up from I think 267 to around 380, 390 a share because I normally do a 6-month cover call on those because there's not nearly as much interest as an Nvidia or a Tesla. But Nvidia's got crazy premiums.
Yeah.
Crazy
Yeah.
premiums. Like you could stay on top of this if you want and do weeklies. You know, today's what, the 25th? So, a week and a half. You could do the 135s and get paid $134 every 100 shares.
That's insane.
And you start doing the math on how many shares you own. This is real money that you could be putting into Tesla, SoFi, Square, Nubank, and you could just be using other people's money to buy more shares.
I got to do more research. I feel like my this has been the cleanest way that I've been able to see it, but I'm also wondering like this seems too clean. Like I don't know.
No, because I'm not making it complicated. I'm not talking about doing credit spreads. I'm not talking about doing butterfly spreads. I'm not talking about doing anything like that. I'm keeping it simple.
Mhm.
It's a very basic way to generate income from your investments. That's it.
And if you want it to stay, this is simplistic. It doesn't have to get complicated.
You don't have it gets as complicated as you want it to be. I am talking about writing a cover call. That is pretty much all I do because I don't like taking big risks. I write calls against the shares I have. So if I screw up, it's not a naked call where I have to put up the cash. I'm backing the option with my shares. So very worst thing that can happen in my eyes is it goes over the contract strike price and the shares get sold. I get the cash for my shares and I have a tax consequence. To me,
Yeah.
that's my biggest downside because I'm holding the stock regardless of what happens. So if Tesla goes down $15 a share, I'm not selling it.
Yeah.
So that's not even a thought in my mind because I'm investing in Tesla knowing it's going to fluctuate. So I'm more than willing to hold it. So I'm going to write the cover calls on it. So something like Nvidia, you want to say, you know what, let's just do it every month. We could go end of July and their earnings aren't until middle of August. So you don't even have an earnings report to worry about. And you could go 145s and get paid $212 per contract.
I'll need to play around with the numbers, but like I get why TJ does this full time. Like I'm like this seems
Yeah.
like I could just replace my income doing this.
If you have
Like,
enough Nvidia, you definitely could. Yes.
not
Now,
just Nvidia, I
granted,
mean on multiple positions, you know?
look, the premiums are great in a rising market. If the market tanks and you see a retracement by 10, 20%, the premiums are going to retrace with it.
But I can
But
collect on the way down though too.
you'll collect on the way down and you'll get premiums that probably look like this, but it's not going to be at 145. They'll probably be at 115, 125. But you'll still be able to make money either way.
Yeah.
And you can always buy back the contracts and sell another set and use somebody else's money to do that. Like you never have to actually come out of pocket.
Let's wrap here. I got a couple more questions for you, but I'm gonna say that off stream.
All right.
Anyway,